Renting versus buying, the old discussion that everyone seems to think that owning automatically is better, especially for new Canadians and immigrants that believe owning the piece of real estate you live in is generally the best idea and that renting is actually throwing money away. And while it is true, culturally speaking, because I'm of that culture as well, and the tax rules favor ownership, such as being granted the primary residence capital gains tax exemption, something like that, right? I'm going to actually give you the flip side of the coin on why renting is actually better than buying, right? Fun fact, I actually rented all the places I lived in up until the house I bought that I'm living in right now, which the studio is in. So I'm going to give you the flip side of the coin on why renting is actually better and why I personally did it. Yeah, I know, right? A realtor telling you not to buy. Wild. Anyways, after watching this video and seeing both sides of the coin, if you are still kind of confused and you're looking for some kind of, call it third-party advisory role on whether you should buy or whether you should rent, you could book a strategy call with me using the link that's on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a RE/MAX brokerage in the Greater Toronto area, on top of making sick, awesome, educational real estate content like this for you. Renting versus buying. Look, I'm making this video because it's a common question I'm getting asked a lot right now, and I'm pretty sure I talked about it in some way, shape, or form previously. But with the current state of the market right now, where market rents are going up, prices for resale are going down, and there's some uncertainty with interest rate, a lot of people are asking, should I wait? Should I buy? Should I just wait and see, right? But first, let me tell you a little story kind of about myself. The current home I'm living in right now is actually the first home I've owned and the first home that I bought for myself personally to live in. Meaning I've rented up until I bought this house, which the studio is in. Why? Well, for me, it just made sense, right? The maximizing ROI, return on your investment, optimization nerd in me, and all the spreadsheets told me that I could get more money, a higher ROI on the capital on buying rental properties based on my expertise and just continue renting in the city that I wanted to. Now, the personal side in me didn't care because at the time when I was doing this, I wasn't married. And the minute I got engaged, we bought the house that we are in right now with the capital made from other investment properties. Now, here's the flip side to the coin, right? I moved more than 10 times in my life, moving is absolutely brutal, which I think I calculate it's one in 2.7 years or something like that. So I never had a home base for security reasons, right? But it was okay as the option to maximize ROI for me made sense. Would I do it again right now? Absolutely not. Based on where I am in my life, I need a home base. This is why even though, in real estate, I always optimize for ROI and we try to get maximum yield, there's always a emotional side and a personal side of it that requires sacrifice to maximize for ROI that some people don't want to make that sacrifice. And this is why I've always been saying everyone's situation is different. And this is exactly why I ask so many questions with potential new clients, because there's just so many factors at play, not just maximizing ROI, which, a lot of buyers and sellers right now are thinking about. And in the case of maximizing ROI, what it means to them is they're trying to time the market, right? And it's really difficult to time the market. So you have to look at many other factors at play. Now, if you want purely looking at a numbers and ROI perspective from buying versus renting, let's do this because that's my jam, right? So I'm going to give you two examples. Both are properties in downtown around the price range of $650, which I would call is entry level right now in downtown. So the first one you can see right here is a condo in a great building I like, Bond Condos at 290 Adelaide Street West. And I've broken this down into three scenarios in which you would be purchasing, which is broken down into three interest rate types, right? So you got the first one, which is at 1.5% interest, maybe buy in February, March, yeah. Then the next is 3.5 if you apparently still have a rate hold, and then 5% fixed, which is right now if you want some security, right? So I'll show you some of these photos over here so you get an idea of kind of what type of property we're looking at. This is obviously a nicer, newer property that's under 5 years old, but it is still under rent control. And this property is 490 square feet. And you can see in the numbers over here that in the February, the cost of ownership would be around $2,300. With a 3.5% rate, you're 29. And with the current rate, 5%, you're at 33, which is, up $1,000 from February, which is what we've been talking about in the last 5 months, give or take, right? With the market coming down. Now, here's where I break down further whether you are, quote unquote, throwing money away. When your interest rate is lower, you pay back more of the principal, meaning you own more of the home. You can see in this chart here where I've highlighted in yellow. Or some people would call this the real estate forced savings plan, which is fine, right? So I'll associate interest money that you're paying as throwing away money because it's going nowhere, right? And compare it to rent later. So you can see that with a 1.5% interest rate, 65% of your monthly payment goes towards paying down your home, meaning you own more of it. At 3.5%, it's a big jump reduction to 36%. And at 5%, it's 23% to principal, which is even a bigger jump. Which means that as the interest rates get higher and higher, you are technically throwing away more and more money faster and faster. And you're essentially renting from the bank. So keep that in mind. Now, of course, as the owner, you're also responsible for taxes, maintenance fee of the condo, and everything else that comes along with maintaining the property, such as repairs. And everything else is more or less equal outside of those things that I was talking about. So over here is an exact same layout in the same building for rent that got rented for $2,300 in 5 days because rental market's crazy right now. So if we take out the mortgage payment from the ownership, your cost of ownership is what this line item I call here, throwing money away, which is basically everything that isn't associated with getting equity, which is your interest payments, your maintenance fees, your interest on the mortgage and taxes. So the stuff that contributes to not increasing your wealth, right? And you can see it totally made sense to buy, versus rent when rates are at like 1.5% because you pay down so much mortgage. But at 3.5%, it's on par, and any money you're kind of making is more or less the same thing as what you're getting by paying down the house, which is equal to 3.5% of whatever your interest rate, more or less, right? So if you put that money into say like a 6 to 8% dividend yielding equity, you're ahead. You're doing better outside by renting and owning something else. So one would argue at the 3.5% interest rate, you're better off investing in equities if you know how to do it, and you get a better and higher ROI. Now, when you get into buying at 5%, which is where we are right now, it's actually costing you more interest, maintenance fee, insurance, and taxes than all of it added up than to rent. So you might as well just rent, right? So renting may be better at this current state of the market right now, especially if you're investing the delta into something that performs better, right? So renting does make sense. You see what I mean, right? From a numbers perspective. And you can see that when I break this all down, the idea that renting is throwing away money is not correct, right? This is what I'm trying to get across. Now, if you found the content useful, it means that other people probably will as well. So make sure you help us smash that like button and share with everybody. And because I know a lot of people out there are deliberating the question I'm proposing in this video, right? Whether you should buy or sell. So if you find any of your friends need help with this, send this video to them. Maybe you'll help them with the decision. And while you guys are at it, subscribe, right? Because this way you'll know when I drop sick, awesome content like this. And if you are trying to do call it an ROI analysis, which is what I just showed you, and to also take into other accounts like personal factors about your specific unique situation right now, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Okay, so here's the flip side of this other flip side, right? Another property, as an example I was telling you, this is actually, I would say, quite a deal. It's a 2-bedroom condo for $650,000. Also no parking. It's right at Yonge and Front. It's an older building, so your price per foot is lower, but this one has the smallest spread between the cost to purchase and to rent that I could find in the current moment right now, in the last, 60 days or so. So here's the property of the photos. Again, quite nice. Sellers updated the inside. This building usually is a little bit better, so not better, older, and you'll see from the rental comparison. And the view is pretty good. On this one, I think you're the 15th floor, so the view's high enough so you shouldn't really hear the noise from the gardener or the trains. So here are the exact numbers. Totally exact same methodology of calculating like I did with the 290 Adelaide 1-bedroom condo. Totally makes sense to buy 1.5%. Again, at 3.5% interest rates, and actually still probably does at 5% right now. And this is because the rent on this unit is higher than the last one, and that's the spread I was talking about. And here's the rental property as a comp. It's not even updated, and it got rented for $30 to $100 in 10 days. Similar layout, same building. And you see how based on, whether you should buy or sell, the answer could be totally different just based on the unit itself, right? However, I would argue that the mortgage pay down at 3.5% interest rate and 5 is so low that I could personally get a better yielding investment than this. Now, The other flip side of that is if you were to reposition this asset for, call it house hacking, renting, say, the other bedroom to someone else for $1,700 per month, you've effectively just juiced up your yield by 2x, 200%, and you doubled it by having someone else help you pay down the mortgage, right? Because you're getting more income. And you can see, just by picking two totally separate properties alone, there's a very big skewing difference between the two of them and the strategy that you can implement. So the question at this moment becomes one that is personal to you, specifically this two-bedroom run. Do you want to have a roommate, right? So the question of renting versus buying is actually very, very difficult to break down, and why I'm making this video, because we need to kind of break the mindset, the zeitgeist of why renting is bad. It's throwing away money. It's not. It's not throwing away money. Like, you don't have to own. So let's just move past this, because based on each person's situation, both renting and buying can be highly profitable. It just depends on you, the individual. And I think me renting my home in my 20s was rather profitable if I look back, right? But there are obviously other, pros and cons that come with renting versus buying from a financial perspective. And I'm going to give you some, bullet points where I break down some of those other points, because those points can be another 10-minute video, which I don't want to get down into, right? So let's start with renting, because most people overlook this. Pros. The mobility. As a young person, you are mobile and you can move around to different countries and cities to work. Also, if you ever decide you want to change careers because, I don't know, like every accountant I talk to doesn't want to be an accountant, you aren't handcuffed to the job just to pay off your mortgage. And you can keep moving around like me, if that's your jam. Note, moving around was not my jam, but it was a sacrifice I was willing to make, right? The other one is alternative investments, right? You're free to invest in other things, crypto, equities, whatever you want, or even other income generating properties, right? Remember, good debt is when someone is paying it off for you. Bad debt is when you're paying for itself, which means if you're renting for yourself, i.e. ownership. Now, the other one is rent control. If you move into, this is the third one, right? If you move into a rent control building, you've locked in your living cost. Now, obviously the con to that is that, if it's a homeowner, like a small landlord, you can get evicted if the seller moves in, right? Obviously, this is a big one if you need a security and you need a home base and you don't want to get evicted. And obviously, to circumvent that, you could rent from an institutional landlord, meaning like you rent from a purpose-built rental, because those are, not going to kick you out. But the problem is most of them are not under rent control, so they'll increase the rent as much as they can based on market, right? Now, let's talk about the pros of ownership, right? And let me reiterate, there is nothing wrong with owning or buying or renting on both sides. Just don't let the societal norms force you to make a decision. Just know the pros and cons of both. So here are the pros of ownership, right? You get security, 100% security if you make your payments. Number two, you get leverage. You can take on leverage, and this is amazing if the value of the property goes up. Your returns are sick, they're wicked, but that's partially speculating because you are the one that's servicing the debt of that home. And you also want to note that the primary residence, like the home you live in, is probably the cheapest type of debt you can get ever, right? Fourth or third, one of those, right? The tax benefits. You could use your RSP to reduce your gross income by 35 grand, give or take, the year you buy in. And also, if you sell that home, all the capital gains you have are exempt from capital gains tax, which could be huge, or it could be irrelevant depending on the time horizon and depreciation of that asset. Then you got the next one, which is pride of ownership. So if you want to just show off and call it like, look, mom, I've made it. Voila, you've owned your home in Toronto. Hopefully this gives you a more thorough understanding of the debate of buying versus renting. And really there's nothing wrong with renting or buying, but depending on your unique situation, both could be good. You just have to understand how to weigh the pros and cons of both sides. And look, there's going to be no 100% best fit solution, because there's going to be compromises, because unless you have infinite money, there are going to be compromises. So if you're unsure of which side of the coin you fall on, whether it's better for you to buy or whether for you should sell, you could book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.